You're listening to AI Prism from Seoul Economic Daily.
It's Friday, May 22. I'd like to share some thoughts about global investors.
So if you're looking at the markets today, there's a lot of noise.
Yeah, what do 150,000 USD ship toll in the Middle East and, well, a massive multi-billion-dollar cash burn at SpaceX have in common? They are both totally rewriting the rule book for your portfolio right now.
Exactly.
Navigating today's institutional cross-asset landscape, it really means connecting these very volatile dots for you, synthesizing shifting central bank policies, geopolitical choke points, and, the AI capital expenditure boom driving Asian markets.
Right, and we really have to start with a policy collision happening right now. The Federal Reserve's April minutes, they reveal a pretty stark hawkish pivot.
Yeah, quite a shift.
It is. A majority of participants are preparing for rate hikes if inflation persists. But then you have incoming Fed Chair Kevin Warsh, and he favors a trimmed mean PCE measure.
Wait, a trimmed mean measure, what does that actually mean in practice?
Well, it's a mechanical adjustment that basically strips out extreme price movements.
Right.
So it effectively lowers reported inflation.
Okay, so it's like the Fed is looking at the raw temperature to decide whether to turn on the air conditioning, but the new chair wants to use the feels like temperature by, stripping out the humidity.
Yeah.
It's the same room, but they have totally different policy triggers.
That's a perfect way to look at it. And this divergence, it isn't just a U.S. issue, right? The Bank of Korea, the nation's central bank, is likely queuing up a July rate hike.
Oh, wow.
Because their producer prices just hit a 28-year high, which is largely driven by petroleum.
A 28-year high. And because Korea's market relies so heavily on imported oil, this spike threatens the easy money policies that have been propping up the KOSPI index, their benchmark stock index.
Exactly, yeah.
If you're deciding whether to hedge your currency risk there, well, this changes your entire math. Those rising geopolitical oil premiums make traditional industries look incredibly risky, and that's tied directly to the physical choke points in the Middle East.
It really is.
With the new Strait of Hormuz tolls reaching 150,000 USD per ship, how does that actually translate into margin compression?
Well, it essentially institutionalizes a geopolitical premium on oil for all of Asia, ex-Japan. Right now, former President Trump claims U.S.-Iran negotiations are in the final stage.
Right, but Israeli Prime Minister Netanyahu is visibly pushing back on that.
He is. So if you are a global allocator, this is binary. A clean U.S.-Iran deal reverses that Korean producer price spike at the margin. But if negotiations break down...
You lock in those high transit costs.
Exactly, you're stuck with them.
So where does institutional capital flee when geopolitical supply lines are strained? Like right into the AI tech boom, I'd assume. The AI demand is fueling a historic Asian export supercycle.
Oh, absolutely. The April trade data makes that undeniable. Japan's chip exports rose 41.6%, and Taiwan's electronics rose 38.9%.
Which is massive on its own.
It is, but the real standout is Korea. Their semiconductor exports surged a staggering 173.5% to 31.9 billion USD.
Wait, 173%. So Korea isn't just beating Japan and Taiwan in exports, they are completely obliterating them?
Yeah, they are.
And why? Because they hold the exact type of high-bandwidth memory chips required to build these massive AI data centers. This directly challenges the Korea discount. That historic structural undervaluation of Korean equities compared to global peers.
Right.
If Korea is outpacing regional export growth by that wide a margin, the old MSCI weightings and valuation models might need a serious rewrite.
Definitely. And if you trace that Asian chip demand to its source, you hit the upcoming frontier AI IPO sequence. SpaceX is targeting June 12, and their financials reveal a massive capital expenditure drag from their AI venture, XAI.
Okay, let's hear the numbers.
In 2025, SpaceX revenue was 18.7 billion USD, or about 28 trillion Korean won, but their losses hit 4.9 billion USD, which is roughly 7.3 trillion won.
Hold on, a nearly 5 billion USD loss on 18 billion in revenue? That is brutal. Are investors really going to buy into a rocket company IPO, or is SpaceX just using Wall Street as an ATM to fund their XAI infrastructure?
Yeah, it's a valid skepticism, but for your portfolio, it's the infrastructure play that matters most here. XAI accounted for 60% of SpaceX's capital expenditures.
Oh, wow. 60%.
Right. So this IPO will functionally set the valuation multiple for the entire AI category. Whatever multiple SpaceX achieves, it's going to anchor OpenAI's expected September IPO.
And OpenAI was last valued at what?
Privately at 852 billion USD. or about 1,280 trillion won.
Wow.
And then you have Anthropic's October listing right after.
So it sets the baseline for everything.
Exactly. Which brings us to the crucial question to leave you with today. The AI infrastructure build-out is feeding all these Asian economies right now, right? But if that AI capex eventually slows down, will this cycle's Asian semiconductor beneficiaries suddenly become highly correlated laggards all at once?
That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a One-IFR award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.